Morning, everyone. It's Stuart here, and welcome to the proptrade.com. We are on the 14th of October. We're halfway through the month, more or less. It's Tuesday, the 14th. You see here on the calendar. Obviously, still we have a lockdown in the United States. No US data today, tomorrow. We obviously were expecting CPI and PPI this week. That's not happening. Retail sales as well is not going to get released. Obviously, President Trump had his big political win yesterday in Israel and in Egypt, and on his way back and probably back in Washington now. This morning, we've had some interesting data from the UK earlier. Earnings continue to run ahead of inflation quite significantly, including bonuses that went up 5% in August. Compared to 4.7% was expecting 4.8% upgraded for July as well. So that's if you got a job, that's pretty hefty. Unemployment actually went up though, and the claimant count also went up very significantly, 25,000. So really, not great data that for the UK again, and we see the dollar on a bit of a front foot against the euro. You can see we've been down. This is a 5-minute chart, guys. We're going to have a look at this into the open. We see a bit of a trigger of a trade. Let's wait till this completed, but that's using this mean reverting strategy, this the stochastics and the Bollinger Bands. In fact, that's probably good enough to buy that. Let's see how we go. If we just do this on a risk basis, let's say let's risk about a full percent on that, 1.0, and we'll buy that at the moment. Why is it not playing out? Why has that not worked? Market, to buy it. 12 lots, not there. Let's do half. 0.5%. Right, there we are. Yeah. A bit late in there, weren't we? But never mind. We didn't put a stop loss. Oh, we did put a stop loss. Where's the stop loss? Stop loss is a bit tight there. Let's move the stop loss down a wee bit. So let's just amend that while we wait for where should we put that? We've got our stop loss sort of down here, 1566. Black space 1566.7. There we are. Something like that. Makes a bit more sense. There we are. And we're at the money on the euro, and we're at the money on the DAX at the moment. We went long on the DAX as well. So we'll see how that pans out. As I say, we go over to the indices as we run into 7:45 an hour, 15 minutes before the cash session. There was a bit of a mess here that was not played out. We've gone side. I want to close that DAX one and have a wait for a cleaner entry. So that was a losing trade on the DAX. See, the cross was initially there, missed it, went to target. Well, I shouldn't really have taken that one, to be honest, but that cross was a bit weak. It's moved down again now. So let's wait for the DAX on that. FTSE, as I say, FTSE. I'll just get rid of it. I don't need the FTSE. I'll just leave it. All of them. FTSE already triggered earlier. That was it was a cleaner push. There's the break of the Bollinger Band, break 1, 5, 10, 15, 20 there, and when we cross there, so we got in here, went to target one, then it's reversed quite significantly as well again. But then we're having another cross here, so it might just be sort of running out of steam on that next retrace leg up. As you can see here, the trend is very much to the downside from about 3 o'clock this morning. So stocks a wee bit weaker. We're positive, a wee bit weaker going into the open. We're still 10 minutes from the open. Euros turned against us as well by the looks of things. See how this one plays out. So wait for that to come. Right. So I say mixed data from the UK. So the FTSE was up, and now we've come back down from the 7 o'clock. Here's the 7 o'clock. The 7 o'clock data was here. Positive run up, and it's sort of mixed reaction there. If we look at cable as well on that, obviously much weaker, or has weakened from the jobs data. So earnings better than expected, but unemployment and sorry, let me make me a wee bit smaller. There we are. Bigger chart. The earnings numbers and the were hot, but we've got a weaker unemployment number, and also the claims significant. So we've got quite a move up there. We are. That's euro's been stopped out. So dollars picked up basically. So we got the sterling down here at 132.80. If I just go back to the dollar this morning, 115.67. So big, the continued move lower that hasn't played out yet. We'll wait for that one again, but we got stopped on that one. So dollar up this morning, 80.33 is where the Swissy trades this morning. So dollar back up here. Yen's it improved earlier against the dollars. You can see here we went down to 51.60, but we're now back to 51.90. We recouped at 30 odd pips here. Let's take this hourly chart. We see we had quite a strong start for the yen this morning, but when the dollars bounced back again, dollar CAD 140.50. We've still got an open position on dollar CAD. In fact, I think we've got a position and a half still on dollar CAD, one from way back last week. So that's heading towards target. I think target one was around about, is it 140.50 or 148? I can't remember. But dollars up against the CAD again. We've seen the euro, Aussie 64.66. So it's a better dollar this morning as we run into the European Open. Sterling, there's that big hourly chart we've just seen following the earnings numbers down. Kiwi 56.90, back under 57 this morning on a stronger dollar this morning. So all of these looking potentially to find a new floor. So let's just use the Kiwi as an example. So the hourly is very much to the downside. A 4-hour continues to be in the under half of the Bollinger Band. So the trend lower continues with the dollar on the front foot. Obviously, the sentiment might be helping the dollar as well. We've got this new tit for tat coming in with China. So there may be a bit of a safe haven bid, ironically, here on the dollar. With regard to port fees, they both start charging each other, China and the US. And it hadn't done before. Port fees from today. So China not backing down, even though Trump and Bessent yesterday sort of toned down Trump's immediate comments from Friday about 100% tariffs, again, increasing tariffs, not speaking to Xi. Expectations are, as I said yesterday, that they will meet by the end of the month. But there's also chatter that the government shutdown in the US could easily last to the end of the month as well. Well, not easily, but very painfully last to the end of the month. And it might be politically expedient for the Trump agenda for that to happen. So dollar picking up over the last we can see here against the Kiwi over the last month or so here, under the 20-day moving average since the 18th of September, and here we are, the 14th of October. So dollar having had a good month so far, particularly against the Aussie and the CAD and the Kiwi, as commodities have continued to rally. If we have a quick run through everything else before we get to the open again, Bitcoin 111,000 now, so we've weakened again overnight. Obviously Fridays, Saturdays shakeout was very painful. Looked like we were coming back yesterday. Here, that's Friday's hourly candle. We've continued to stay under the key 112. I've gone back under the key 112,000 level. So here, if we've got the daily time frame, so it still looks relatively well bid Bitcoin, but we've certainly come shaken out a lot last week. So we're still pivoting through this area here, but interesting that we remain under the 20-day moving average, and the rally yesterday has been sold off so far today. So the holding of 112,000 has been breached so far today. So watch that one going forward. Looks remains weak from Thursday, Friday's sell off. Friday's sell off in particular, and are we going to recover back to over the 112,000? If we don't, we go back to the 109 and 107 channel through here for Bitcoin, and then the psychological 100,000, which we went in to test on Saturday's low volume hiatus. So Bitcoin under pressure again today. So the bounce we had on Monday has been taken out. Energies continue to be under pressure. We've moved up a little bit this morning, but Friday's shocking move down here, this WTI, so we were out of the channel, out under that key 62. Big move down on Friday. Minor move yesterday, up from the lows of 58.50, and we're at 59.50. So that remains to the downside, pressure on the oil market. And indices. Let's have a look at that's the dollars. We had a big bounce yesterday. Let's just use Nasdaq. Nasdaq was up 2 and a bit percent yesterday. Huge bounce from the close. So we opened much higher and we held it, and then we moved higher. But today, futures have taken all of that back. So technically, we still, this huge Friday sell-off is still engulfing price action. At the moment, all-time highs, which we'd got to ironically on Friday and Thursday, 25,200 had been eaten up. Big day today. We kick off the earnings seasons. The banks, Citi, Wells Fargo, JP Morgan, the biggest of them all, JP Morgan Chase, and Goldman Sachs, all reporting earnings. I think BlackRock report as well today. So quite a significant day for the start of the third quarter earnings season in the United States. That obviously will go ahead. It's not government data, but will move the indexes later on today. Most of those report before the market bell this afternoon in the US. So Nasdaq down, the Dow down at 45,800, and the S&P 6606. We closed last night at 6,652 on the S&P 500. Up a significant 1.56%. I said Nasdaq was up 2.2%, and the Dow was up 1.3%, nearly 600 points. We're giving some of that back today. The S&P was up 102 points yesterday from Friday's close down here. But as you can see, from a technical sort of a candle perspective, that's still a very weak and big, huge body down candle, biggest down day since I think April. In fact, it looks bigger than that, doesn't it? Somebody was saying it was April. Yes, I was really listening to it. But yeah, that's a significant down day on Friday. So we need to break out of this to the top. We're going to continue to come up. A break below the bottom of this Friday's close will be very significant. A break out of this Bollinger Band will also be significant. So we could go sideways, but at the moment we remain under the 20-day moving average, which is key. Technically for many systems as well. So index is finally looking a bit weak, despite that huge deal yesterday. Broadcom with a massive deal with OpenAI, partnering to produce chips specifically for OpenAI. They were up 9.88% yesterday. Massive deal. And these numbers are absolutely eye-watering. We're talking about billions and billions of dollars. Trillions of dollars moving forward. So, the big mega players like Google and Microsoft and all in the party, in the mix. And so some of the chips and the software players very much in focus. But it's it's another example of the narrowness of the stock market rally. The mega cap 7 plus these new players pulling the rest of the market up. The broadness of the rally is still very, very much questioned. So anyway, still, you can see here. I'll use the Dow as a perhaps a different, better example. We're still, relatively moving up nicely, strong, steady tech. But again, that's a really significant shakeout on Friday. Technically, are we going to see some more taco trades as Trump backs down again, or perhaps not? Empowered by the political gains he's made. We'll see. But as I was saying last week, the markets could really do with a bit of a cool off. But anyway, let's come back to Europe. See where we are. We've had a bit of a messy start here. So where are we? So let's just go up to the hourly chart and come down where we are. So we have been down so far since 2:00. So there's our move lower. There's our high of the days up here, way up here. So we've turned lower on the weaker close to the Asian session. As our high for the day, and our low for the day is here, just coming in ahead of the open. We tried to catch that bottom, didn't we? In fact, the low's there. So that's our low and high for the day. Let's come down the time frames. I might lose these lines. Oh no, there's our 15-minute chart. So there's our low for the day. Again, so 15 is just about saying bye. Remember, we got stopped out on that one on the 5 minutes. So bit of a sideways action so far. Say not a lot of European data until 9:00 when we get the ZEW. In fact, from Germany. Remember, that's how businesses are feeling. It's another sentiment indicator. So we'll see what that looks like in a minute. Inflation in Germany is in line. Has that come out already? I thought it came out during the day. German CPI, but so it's an annualized one. So what that looks like later. There is a speech by Powell which may move things later on around about the close of the UK market and the European market. I think he's speaking to the housing committee later on. But anyway, see the DAX is going to move anything ahead of the ZEW following the inline expectations from CPI. So again, inflation a little bit hotter than expected, hotter than last time, in line with expectations in Germany. So the DAX sideways. Whoops, no trading accounts active. Oh dearie me. What's happened there then? That's not great, is it? Let me just. Dear. Platforms, demo, locker, log in with a different account. Well, then. Log in. Just bear with me a second. It looks like my trade locker's just dropped out. No, it's saying I've got no account active. Oh, dearie me. What can I say? My charts have just dropped out. Trade locker has been playing up for a while. I wonder if it's the fact that we were a year old yesterday. I bet it is, isn't it? That's explained. It's not been updated. Let's try that one. Just bear with me a second. No, I've lost my charts. Right, I'm going to call this closed early and go and try and reassess this. I might see you later for a webinar I was scheduled to do today, a training webinar, but no, I've lost my charts for the day. Okay, well, we're not going to trade the open after all. There we go. Interesting, it fell out right on open as well. What I did want to bring to your attention was, we've had another new all-time high for gold and silver again this morning, following yesterday's new all-time high. We've come off a little bit since then. However, I say Asian markets are a bit wobbling on this idea about the reciprocal fees between China and the US. So things are got sticky again, as they do in these negotiations. And the other key thing I wanted to bring to your attention as well is the idea that this is becoming more certainty as far as the market's concerned about rate hikes in October and December. I had a quick flick at this before we came live this morning. 98.9%. So that's 99%, isn't it? 99% certain that on the 29th of October we'll get a 25 basis point cut. That is what the market is pricing in. And then which it has been talking about for a long time, but the certainty of it hasn't been this strong for a while. If we go to the next meeting before Christmas, the 10th of December, the final one for 2025, a 97% chance of another 25 basis points. So by the end of the year, markets are anticipating interest rates in the United States to be 50 basis points, half a percentage point lower than they are at the moment. If we skip forward into 2026, the January meeting is obviously less fluid. Oh, sorry, it's more fluid. We've got a 50-50 of a further 25 basis point cut. So we'll see how that's the one to keep your eye on as we go forward. As you can see, we are currently here at 400 to 425, and there's a 50% chance of it being close to 100 basis points lower than we are at the moment by January. But definitely looks like 2 cuts are coming before the end of the year. So all that is priced in. And so the scare would be if that didn't happen with regard to the dollar, and that explains why the dollar's improved. But I can't show you that on my charts because TradeLock has decided my account is no longer valid. So I'll just take a screenshot of that for my. For my admin people to try and fix it for me, no doubt. Right, I will perhaps see you later on today. If not, have a good trading day. I got no charts. It's like I'm your right arm cut off, really, when it comes to try and explain what's going on. Let's have a quick look at the Reuters headlines this morning, the Bloomberg headlines this morning. Asian markets hesitant as investors wary over US-China trade. That's what we've just been talking about. There's an all-time high earlier today. We got off on gold again. I say since then that's we've come back down again. Oil edges up as China, as US-China tap down trade tension. Well, that didn't happen, did it? Dollar pulls back as risk sentiment. That's half an hour ago. It looked like dollar had improved, didn't it? As what we were looking at, and into the European Open earlier. So a quick look at the free live feed. This is quite useful, guys. I don't know if you follow this investing live. It used to be forexlive.com. Sterling way down after UK jobs report. We had a look at that, didn't we? There's the silver and gold reverses calls on the day turn. Oh, yeah, I picked that turning lower. Asian stocks tumble 1.2% on US trade war. Nikkei down 3%. So there we are. Okay, I'm going to wrap this up with no charts. It's difficult to trade live, doesn't it, when we haven't got any charts? But so watch the German ZEW. Keep an eye on what Powell or even Bailey Waller might have something to say with regard to him becoming the next chair. That doesn't look like that's going to happen, to be honest. And Mickey Bowman as well has got a speech. So the two initial outriders on the Fed, both members, both got speeches later today. So it might be a bit of interest in that as those speeches come out today. So anyway, have a look at that and see how that comes out later. So take care. See you soon. If you're not currently with us, oops, there we are, different languages. Our evaluation platforms start from a $5,000 account. Step 1 or step 2 challenge. Most popular is still the standard challenge, actually, which is a 2-step phase. The $5,000 account starts from only $55. If you're new to the proptrade.com and you've not had an account before, new 25 does exactly what it says. You get a 25% discount, and that makes that $5,000 account, only $41. However, you get a bit of equity, my friends, makes trading bigger lot sizes easier. $50,000 account comes in at just over $250 from $345 if you're new to us. If you've already used this one, you can get a Discord 20 gets you a 20% discount. If you've used that 25% more before, that gets you a 20% discount of these higher value odds. But keep your eyes peeled on our social media platform. Lots of news coming, lots of new promotions coming. So keep watching, and hopefully I'll have my I will have my charts back tomorrow. Okay, take care everyone, and we'll see you soon. All the best. Bye bye.